Hello, my name is Mark. Jim Rogers is a famous American investor. In the interview in July 2022, Jim Rogers stated that the situation for US equities is about to get a lot worse. Jim said that more bear markets are coming and that the next one is going to be worst in his lifetime. One of the reasons for the coming crisis is indebtedness level. The debt level in 2008 financial crisis was large, but since then the debt has skyrocketed everywhere. So that is one of the reasons why the next bear market will be very hard. The national debt of the United States is the total national debt owed by the federal government of the United States to Treasury security holders. So, as we can see in the previous period, debt has grown significantly. Federal government debt in 2008 was around $6 trillion and in 2022 it was more than $30 trillion US. High public debt can negatively affect capital stock accumulation and economic growth by heightened long-term interest rates, higher distortionary tax rates, inflation, and a general constraint on counter-cyclical fiscal policies, which may lead to increased volatility and lower growth rates. Studies on the channels through which debt adversely impacts growth also find that when the debt to GDP ratio reaches elevated levels, the private sector seems to start saving less. In an interview, Jim Rogers stated that in the 80s, interest rates on US Treasury bills were over 20%. It cured inflation and it solved the problem finally, but since then there were made so many mistakes that this time in economic policy, if interest rates go high, there will be a serious recessions and many people will go bankrupt, and in that case there will be a lot of problems. In the United States, the federal fund rate is the interest rate at which depository institutions, banks and credit unions lend reserve balances to other depository institutions overnight on an uncollateralized basis. Reserve balances are amounts held at the Federal Reserve to maintain depository institutions' reserve requirements. Institutions with surplus balances in their accounts lend those balances to institutions in need of larger balances. So there are two ways to solve the problem. First one is to significantly raise interest rates, and that will have a lot of pain, inflict a lot of pain to the economy, or to continue to print money and have high inflation and cause even more pain, because printing money would just make inflation much worse. As an advice for investors, Jim Rogers states the following: stay with what you know. Invest in assets and companies that you understand. The second one is to short only if you know when to sell. And the third one is to put money into bank account, because it is better to earn 1% per year than to lose 20% per year, and bear markets lead to big losses. If there will be an inflation, interest rates will also rise, so the interest rates on deposits will catch up with inflation. Regarding cryptocurrencies, Jim Rogers is no fan of Bitcoin. He stated that there is no level at which he would buy cryptocurrencies unless something dramatic changes. Dramatic change would mean that Bitcoin becomes a national or global currency, but then he said that it would no longer be cryptocurrency, but it would become electronic currency backed by the governments. So Jim Rogers is still no fan of cryptocurrencies. Thank you for listening. If you like the video, click like or subscribe.